Rahul Shah, Associate VP and Group Leader, Equity Advisory Group at Motilal Oswal. Hi Rahul, morning and good to be speaking with you. So Rahul, good run-up continues on the benchmark indices back home. But along with that, a lot of sector turning that is still underway. And especially just yesterday, we had seen financials taking the lead, and especially the PSU banking pack. Help us understand sectorally, where are you finding opportunities and what's your current take on financials?
Hey, good morning. I think where the markets have been, I think the domestic macro factors have been, very, very strong. If you talk about start from inflation data, which is a good data. If you talk about GST, tax collection, monsoon, auto numbers, and the liquidity side and front side from the action from the RBI side. So all these factors put together seems to be a strong, picture for domestic story. We have a lot of noise from the, global news and we keep on, the markets keep on reacting. But I think that has been, all this volatility has been absorbed. And if you look at it, I think one clear winner, if you see between this entire markets have been, I think the large cap stocks have been done very well. All the sector leaders, if you look at, and starting from, and if you look at this is the base of, the way the markets have been, I think the old economy stocks have been a very, very strong, performance in last 2 quarters. So what I believe is, I think, obviously, if we talk about cement, metals, a lot of stocks have been hitting 52-week high in that space, in spite of Nifty still away from the all-time high. So my sense, I think, banking, if you look at it last 8 months, I think performance of most of the private banks, and especially the large banks are trading, have done quite well. And the performance also of most of the large banks have been pretty strong. So we expect that, I think, and financials to do very well in entire, markets from here, and especially the private sector banks. And if we expect that 20% growth and FY26 to 28 in the large private banks. So starting from, that HDFC, ICICI, both banks, robust numbers, we expect good return ratios, balance sheet is strong, and going forward, the credit growth also in these two stock companies may remain pretty strong. So my sense, I think 2 private banks will continue to do well. Third, I think from a PSU packed State Bank of India. So all these 3 large should do well. So if you look at all the 3 banks have outperformed in last 6-8 months if you look at it, and we still believe this will continue to do well. Secondly, followed by the strong NBFCs and few HFCs. So I think NBFCs like Shriram Finance or maybe L&T Finance, both will do continue to well. One is obviously the straight the cost of borrowing will go down and which will impact their balance sheets and P&L immediately. Secondly, I think the kind of push from the the GST costs, I think that this will drive consumer demand, and I think this will directly benefit the NBFCs. So I feel valuations are reasonable. I think I've been a long period that says NBFCs have not done well. So I think from your risk versus reward also quite favorable for the 2 NBFCs. I think financials should continue to do well from here.
So that's a take coming in on financials. But Soumil, coming to you, I was just taking a look at the week-to-date gainers, and real estate comes out as the top for the week so far, a 4% uptick on Nifty Realty. What is your take on some of the real estate stocks? Because this morning we also have a report coming in from Nuvama wherein they are citing some growth fatigue or some slowdown that they're seeing in some of the markets in India. Well, that's on the fundamentals. On the technicals, where do you think this index is headed, and which stocks amid this basket are you liking?
I think on the technicals, I'm pretty bullish on real estate stocks, especially my top picks would be DLF and Prestige. All the real estate sector, all the real estate stocks, even Lodha, Godrej Properties, all of these are looking great on the charts, trading about DLF and Prestige, both are trading about 200 daily moving average, about the short-term averages, has broken a downward sloping trend line on the upside. Great setup. I think the medium-term uptrend has already resumed for DLF.
In Kunshan Q Tech Microelectronics, worth 553 crore rupees for camera and fingerprint module modules for mobile handsets. Give us your take on this stock in particular, if you have any coverage, or the sector overall, and where do you think with all the PLI schemes that have been working for this sector, where do you think the whole pack is headed?
So I think this sector, I think if you look at it, has done quite well, and I think looks like will continue to do well from here onwards as well. And especially if we talk about Dixon, people might debate about the valuations, but I think the kind of growth this company has got, and the management's guidance of the last quarter number as well. So I think stellar growth from FY26 to 28, 40% guidance, and I think which way they're getting into it. So I think the valuations are justified. I personally feel that I think any correction, or maybe at this level also, one should look at getting into a Dixon for a 1 year view.
Just look out for Cohance Life as well, because there is going to be almost a 5% block deal that one is picking up today. The offer size is, of course, 1,756 crore rupees. The floor price has been set at 900 rupees per share, and that equates to almost a 7% discount to its yesterday's closing price. That said, let's look at some of the momentum buzzers from yesterday. And, Kunal was making a very interesting point that it's no more just about M&M, but Maruti also seems to be making that move within autos. Soumil, other than M&M, where else would you bet on within the auto pack if you had to take a trade?
Auto pack has been in everybody's radar for a little while now, and it's been doing great. I would prefer Bajaj Auto, because Bajaj Auto has very good risk reward ratio from here. Maruti, M&M, they have done really well. TVS, Hero MotoCorp, and Eicher, they have done good as well. But from here, I think the best risk reward ratio is at Bajaj Auto. Bajaj Auto has broken out of a huge inverted head and shoulder pattern, trading about 20-40 daily moving average. Still, the medium term uptrend is intact. So I'll be buying on declines. The support would be around 8,970, and the second support is around 8,700. So these are the two levels. Buy on decline should be the strategy. I'm aiming for at least 10,000 to 11,000 zone, a big zone for a medium term outlook target.
All right, that's the take coming in on autos. But one of the other stocks that is going to be in focus today from the pharma pack will be Biocon, because not one but two approvals is what the company has got from US FDA. While the drug names are a bit complex, one of the drugs is used in the treatment of osteoporosis, and the other one is also used in the treatment of serious bone-related conditions. Along with that, it's also cleared for the use in oncology. But Kunal, wanted to have a chart check by you on Biocon. Since just yesterday, we had seen the stock taking a little bit of hit over there. But do you believe it's ready for a jump up?
Not really, I would say, Ms. Srishti, because, the stock has been a huge disappointment. Frankly, when we look at this with respect to the pharma stocks, even when we look at the recent charts, I remember, I think, in August, mid of August somewhere, there was this negative news flow for, the stock price. It was closer to 350 levels. But then surprisingly, the stock managed to bounce back from those levels and come back from 350 to 365, 370 thereabouts. So I think it's been an odd stock in terms of news flow and the impact of news flow with respect to the stock price. Even last time I had mentioned that I think that breakout of the 360 by 370 barrier on closing basis is something which could probably propel the stock higher. But then the fact is that the stock just loses momentum whenever it comes closer to this resistance point, and goes into a corrective phase. So it's more like a trading stock over here. 350, 370 broadly is the range for Biocon. So would look to trade into this range and not look for a breakout unless the stock breaks past comfortably above the 370 levels.
Okay, so that's on Biocon. But Rahul, want to get your sense on some of the shipbuilding names, because they have been slightly under pressure in the beginning of the week, but yesterday they once again started to see some momentum. What's your take on overall defense and especially shipbuilding stocks, because it's been a volatile week for some of these names?
So I think defense as a sector, I think if you look at a quarter before, I think they had done, almost all of them were at 52-week high. And again, from there, we saw some kind of correction. So I think overall defense as a sector, I think relatively, few stocks will definitely do well. So some of them have, gone to the roofs and the valuations are not justified. That's the stocks. What we like in terms of in this space, I think is something like Bharat Dynamics. I think, the stock has already corrected close to 15% from their highs. And I think the valuation looks better off from the highs. So I think this can do at BEL, definitely one of the better performers, and I think where the stock is again almost closer to the highs. So this is also one of the stock I think what we've been liking. I think in the shipping space, defense space, I think small allocation one can always have it on must count. Looking at this thing, the valuations, looking at it, I think the valuations are definitely going to be rich in this sector.
Okay, Rahul, great to have you on the show. Thank you so much
My
for your
pleasure.
time. Good speaking with you as always. Let me just revisit